Hello everyone. In this video, I will explain the journal entries needed for admitting a new partner to a partnership when they contribute assets and how this affects the capital balances of the partners. You might come across this problem in your Accounting 2 or Managerial Accounting class. Let's say that after the tangible assets have been adjusted to current market prices, the capital accounts of Grayson Jackson and Harry Barge have balances of $119,000 and $202,000 respectively. Luane Gorman is to be admitted to the partnership, contributing $80,000 cash to the partnership, for which he will receive an ownership equity of $104,000. All partners share equally in income. Now we must journalize the entry to record the admission of Gorman, who is to receive a bonus of $24,000. This $24,000 bonus is the difference between $80,000, the amount Gorman contributed, and $104,000, the amount of equity Gorman is receiving. For this journal entry, the first account being affected is cash, and it is increasing by a debit of $80,000. We know that Luane Gorman's capital account is being increased by a credit of $104,000, so we can put Luane Gorman capital $104,000. For the bonus of $24,000, both Grayson Jackson and Harry Barge must give up some capital to Gorman, which will decrease both of their capital accounts. Because partners share equally in income, Jackson and Barge must give up an equal amount to Gorman. $24,000 split between two partners is $12,000. So both Grayson Jackson and Harry Barge's capital accounts decrease by a $12,000 debit, which leaves the journal entry balanced. So we just put Grayson Jackson capital and then $12,000, and then Harry Barge capital $12,000. This leaves the journal entry completely balanced. Now, after the admission of Luane Gorman, what are the capital balances of each partner? So we have three partners, Grayson Jackson, Harry Barge, and Luane Gorman. Gorman's capital balance is very easy as it is just the amount of equity he received, so his balance is $104,000. Easy. We have to do a little math for the original two partners, but it's not too much work. All we have to do to find the balances of each capital account is subtract the amount of capital they gave up to Gorman for the bonus from their original capital account balances to find the new balance. For Grayson Jackson, you do $119,000 minus $12,000, which equals $107,000. For Harry Barge, you do $202,000 minus $12,000, which comes out to $190,000. So one last question. Why are the tangible assets adjusted to current market prices prior to admitting a new partner? Basically, tangible assets should be adjusted to current market prices so that the new partner does not share in any gains or losses from changes in market prices prior to being admitted to the partnership. For example, if the market price of land doubled prior to admitting new partners, the existing partner should realize the increase in the value of the land in their capital accounts prior to the new partner's admission. Otherwise, the new partners would share in the increase in the market value, which isn't fair as they did not help buy or improve the land. And there you go. That's all you need to know about the basics for admitting a new partner who contributes assets. Obviously, this is not super detailed as this is just for a basic Accounting 2 or Managerial Accounting class. But yeah, I hope this video was helpful and that you learned something new. Thank you all for watching and have a wonderful day.